Good evening to all of you. Welcome you to today's webinar. Today we are going to continue our discussion which we had last week on Fibonacci trading system. Today our focus will be more on identifying the Fibonacci support levels and resistance levels for intraday trading. Last week we said that the Fibonacci can be used for we could use it for investment. I will again show you some example, but investment, then we can use it for intraday or position trading, whichever way you want to use it. You can do it for intraday or position trading. Now today we are the last few webinars, and today also we are only looking at Fibonacci numbers or ratios. We are not come to Fibonacci fans, Fibonacci arcs, which are slightly more advanced compared to Fibonacci ratios, because they use the time also. Now we are only doing it based on the price, but normally the support resistance are more determined with the help of time also. So that means Fibonacci price time ratio will decide where exactly the support and resistance come. We will see in due course of time. Today we are only focusing on Fibonacci ratio, Fibonacci numbers. Let us see how we are going to use it in intraday trading. Now, for investment purposes, we have already used it for investment purposes. But again, before we go to intraday trading, we will illustrate this again and then go for the intraday trading. Now, this is the Nifty chart. Now, let's look at the big chart for investment purposes. Now, this is the monthly chart. Normally for investment, it is better to wait for a bigger retracement before you do investment. Now what is that bigger one? See, this time from the pandemic crisis, so we will now look at the pandemic low as the most important low. Then after that we will use this particular low, which is the low which we saw in June last year, June 2022. And then probably we can also use this particular low, which is the low which we saw in September, that is 16,747. So let's look at all these three and decide where all the supports will come for investments. Now we'll go from the pandemic side. We will put the first Fibonacci ratio of 23.5% from this level to this. Okay, so that comes to 16,186. 16,186. It could be a little slightly more, but I think that is quite far off. So probably you may now feel that is very far off for us to consider at this point of time. So we will look at first whether this Fibonacci number, Fibonacci, this one has been 23.5% from this level. Now that has been, so that particular level has been breached. There is 18,031. So why that is important, we'll come to that. 18,031 is a 23.6% Fibonacci from the low of last June till the present high. So that has been breached, but we have not got to the 38.2% retracement, which is 17,480, 17,500. That is why in earlier webinars we've been saying that if it comes to close to 17,500, it makes a good sense to go for some investment. Now we will look at the Fibonacci ratio from this low. So we will remove this, and we will take it from this level. Okay, so that has come exactly at 50%, 17,792. Then the 61.8 is 17,529, and from the previous pivot of the last June, it was coming close to 17,485. That is why I said that 17,500 could be the next important level if 17,790 is going to be broken. So till such time 17,790 is not broken, probably we have to look at this move as still on the positive side, Now, so the first resistance that we normally will now have is, see, we'll go to the daily chart. Now okay, now if we draw the we have already explained that if one Fibonacci level is broken, okay, that level becomes a resistance, or one level above that becomes an important resistance. Now let us say this has come to 17,818, right? So 17,818, and the first break that came of 23.5% of this is 18,386. That is from 18,880 to 18,386, approximately 500 points, or slightly less than 500 points. So once that 23.6% retracement is broken, then that particular number itself now becomes a sort of a resistance for any up move. Now here let us say this particular place, it came down to 17,774. You add another 500 points, which becomes 18,274. That is why we have seen this 18,275 not being broken. So 18,274 not being broken. If 18,274 is going to be broken, then I think we will have a slightly higher level. But what is very important is that we have already mentioned about Fibonacci ratios, which are the 23.235, 0.386, 0.5 is not there, not a Fibonacci, but is taken by traders, 0.785. So this is the most last important level, which normally the traders look for reversal and trying to buy either at the bottom or probably sell at near the top. So you can use Fibonacci also for doing a counter trend type of trading. That is, let us say you know the trend is down. So how do you know the trend is down? Either you use a daily basis, or you use a weekly basis, or you use a monthly basis, or you use even an intraday 1 hour chart. We are now going down to the intraday 1 hour chart, but before that we will look at the weekly, monthly, daily and 1 hour, so that now you will understand and implement it for intraday trading also. Now let us look at the chart. We said this 0.785 is the last important level. It is normally the market on any rally may not go up to this. It can trade anywhere between 0.618 to 0.785. Normally it can go anywhere between 0.618 to 0.785. So let us look at the big trend right now. Now let's say if it is going to rally, from here, so what is the Fibonacci resistance that will come? So we will have the resistance which could be going right up to 78.6%, comes to 18,620. 18,620 is where it can go up to, right? So we are not on the time basis because of that, because of a lot of stagnation which is taking place here. Probably the important resistance can come slightly below the 18,620, which we'll explain later on. But 18,000, whenever if rally takes place right up to 18,620 or probably up to 18,439 or 440 itself, probably we will have the next resistance coming if it is going to break this 18,275. So 18,275 break will see the market moving between 18,450 to 18,620, where probably there could be some sort of a resistance, and once a final breakout of that takes place, then we will have a bigger rally to take place. Then in that case you can buy above that, keeping 18,025. This is 23.6% is 18,025. Then you can move your stop loss to 18,025 and then keep it. Right now it's 18,620. So let us assuming that it is going to break the 18,620 or whatever high it is going to make between 18,413 and 18,620. That high, if it is broken, then in that case you can go long for position keeping 18,025, because that is the Fibonacci level which is above the zero level, right? So you can keep that particular level as a stop loss and keep moving up on the upside. So right now at this point of time we can say that it is positioning itself probably to go up, but will face resistance if at all it moves to between 18,439 to 18,620, and the final break of that place probably could put the market back in a bigger bull orbit. Okay, so this is as far as the investment side is concerned. So right now we have already said the last 4 weeks it is stagnating around this particular level. So it looks to be a very decent level to go for a buy based on the judgment, because it has already fallen to certain levels, okay, and it has fallen by nearly 5.5% from the peak. Because it has fallen from 5.5% from the peak, we have said that no, let us look towards some sort of a buying in case if it starts to look like stagnation or looks to be going on the upside. Okay, so the first upside will come if 18,285 is going to be broken. If 18,285 is going to be broken, that's the first upside that we will get. Okay, so now we will look at the bank nifty, as well as now we will go, but before that we will now start looking at the intraday. Okay, now we will go to the daily chart. See, the simplest way is this. Okay, now identify one pivot low, identify one pivot high. Pivot low and pivot high you are already aware. Okay, now let us say it is now climbing, it is going like this, then it is starting to dip. Okay, when it starts to dip, then in that case the last important support should come at 78.785 into this difference. That is, let us say this is 15, this is 20, right? So the difference is 5 rupees. 5 into 0.785, 5 into 0.785, that comes to 392. Let me say it is 4 rupees. So 20 minus 4, 16. So the last important support should be 16. Okay. So what does a normal trader do? When it comes closer to this place, you will look for some reversal. Now, because sometimes it can keep going down like this. Now, let us say you are looking for some reversal at around this particular level of 16. Then in that case, you immediately go long, keep this low, which comes very close to the 78.5% as a stop loss. So then you just suppose if it again, now since it has come, there is a pivot high here and it has come down, then in that case when it starts to move up, be careful about a 78.5% retracement of this particular move, because there is a chance that it can go up, it can form a lower top and it can keep cracking down. So the two places that you need to really watch is a 78.5% retracement of this up move and a 78.5% retracement of this down move. Now let us say this, after a 78.5% retracement, it starts to cut this particular high, which is between 61.8 and 78.5 or above 78.5% retracement. Then in that case, what you do is you can just go long straight away. After it cuts the 78.5% retracement, you can go long, keep even something above this low as a stop loss, and so that we will illustrate right now. Okay, now let us say this is a daily chart. Okay, for intraday purposes, it doesn't mean that we have to go only for intraday time frame. We can plot the intraday support resistance levels using the daily charts also. So let us look at the daily chart, and here if you see on a we'll put a line chart. We'll give some this one. See, the line chart is very clear about the highs and lows, right? So here if you see, this is a okay, this is a low, right? So this ray which I have marked here, this is a low, right? So this area is a low. Now this area, we will look at the low of this particular day. Now it has started to fall. If you see, today there is a fall, right? Today there is a fall. This is 19th, this is 18. So compared to 18, 19th low is 19th close is lower than 18th low. So it has started to fall. So what we are going to do is we are going to draw the Fibonacci from this level to this level. What is the last important support? It has to be 78.5%. So now we will look at the bar chart or candle chart. So candle chart is this I've drawn from the close. Now we can put it on the low, right? So now we will for this we will draw the Fibonacci from this low. Okay, so today when it fell, the 38.2% retracement, which is the most important because of all the ratios in Fibonacci ratios, 38.2 and 61.8, that is 38.2% retracement and 61.8% retracement are significant retracement points, and the last important level is the 78.5% retracement. Now today when it fell, the first support that it came was a 38.2% retracement, right? So if you can see, it is a 38.2% retracement which held. Okay, so the first 23.5% retracement was 18,108, and 18,108 was cut. Comes 18,059. So we will now look at the trading plan later on. 18,059. So to what extent we can go? We are looking at anything up to 17,925 because that 78.6% retracement is 17,925. So what are the support levels based on this chart of the Nifty chart? 38.2%, it came to 18,059. Okay, 50%, 61.8 and 78.5. Okay, we look at the 50% is 18,020, then 17,981. 18,020, 17,981. Okay, and 78.5% retracement, 17,925. So what is the plan right now? The plan is today's low is 18,059. If that is going to be cut, let us say it is going to be cut, then in that case 23.5 was 18,104, and the peak that was made was 18,179, I think. 18,183. Okay. Okay. 18,183. Right. So the peak was 18,183. So what is the difference between peak and 23.5 retracement? It's approximately 79 or 80 points. Keep that in mind. Okay, please keep that in mind. We will use this later on. Okay, now 38.2% retracement 18,059, 50% is 18,020, 23.5 is 18. So we will look at all these levels right now. Okay, and look at the chart and hourly basis. Then you can decide what type of trading plan today you could have had, and tomorrow what you could have. Okay, now let us say at any point of time you want to buy tomorrow. Okay, today let us look at the close. Okay, today's close is 18,089. Today's close is 18,089. So now tomorrow let us say there is a fall immediately on opening. I do not know what will happen, but immediately assuming that there is a bigger fall. Suppose if it falls suddenly, okay, with a jerk, it opens with a gap down, go up down. Then in that case, what could happen is, if it comes to this level, it will become a support. Immediately you can see 17,980 being picked up. I think it is being programmed like that. So 17,980 will be picked up. If it drops a little drastically down, it cuts down by 150 to 160 points, then this will give a support. This will give a support. So you keep in mind what you should do. Let us say tomorrow it opens, okay, down. Then in that case you can buy, wait for a fall probably towards 17,980. Well, let us say it opens in a normal manner, maybe 18,100, 18,070, 80, it opens like that. Then in that case there is a fall. Then in that case you buy, wait for a fall right up to 17,980. Wait for a fall and then wait for it to come right up to 17,980 and then look towards buying. Okay. If you buy there, put a stop loss which is below 17,925. So that means you are buying in a counter trend move because you don't want to lose much of the thing. So what you do is that you are buying at 17,980. Okay. And if it comes to 17,925 also, you are buying. Okay. Put something, some 10, 20 points below that as a stop loss. So suppose if you get these two levels, probably your average will be close to 17,950 or 960. Surely there is a good chance that it could jump. It could jump, and from there it could even head towards 18,050 or 60 levels. Now, if you see the Nifty right now, no, in intraday, normally the shift takes place every 110 points. There is a if it cuts 110 points from the peak, then it goes down. If it cuts 110 points from the bottom, then it starts to go up. So this is happening. Now 18,183 and today was 18,059 or 60, right? Now, so once it started to cut this 18,070, 80 levels, then in that case we can say probably it has made a peak, and 18,183 we can assuming it to be a peak for the time being. We can assuming it to be a peak for the time being. Okay. So now 18,104. Let us see what happened today and what can happen tomorrow. Now today it fell down to this level, right? It fell to this level. Then it started to cut 18,108 again. It started to cut 18,108 again, right? Then this is hourly chart. Then when it started to move up, you see every time after that, the next 2-3 hours, whenever it fell to 18,108, 109, it started to get support. See, once it started to cross that, then 18,108 was a support. Again 18,107, 105. So closer to that was getting a support. Now, once it started to break that decisively, we saw the resistance. Now this close was below 18,108, right? So this close was 18,103 and the low was 18,087. So once it started to happen, then in that case when it started to move up, it had a resistance closer to 18,108. So clearly the 23.5% retracement of 18,108 seems to be offering some sort of a support resistance for the day. So what could have happened is today it opened gap down, and normally we say the gaps are generally are not if it will get filled after some time, but once it started to move up, you can see we can use this gap one. See it when went up to the gap level of yesterday's close, which yesterday's this place where there was a gap. Okay, there was a low 18,155. The resistance came closer to 18,155 and it started to get pushed. So the gaps are also, we have to factor that along with the Fibonacci for a helpful analysis. In this case, you could have shorted below 18,108 and put in a stop loss above 18,155 or above 18,187. Then it started to take support at this level. Now that level has not been cut. That level has not been cut. So now what you can do is that it depends on type of stop losses that you want. Normally what we do is that if one Fibonacci level is cut, okay, then in that case we keep the one Fibonacci level above that which is being cut as a stop loss. Now let us say it cuts 38.2%, 38.2%, we will keep the higher itself as a stop loss. If it cuts 50% or comes closer to 50%, this 23.5% retracement will be kept as a stop loss. If it comes to 61.8, we will keep 18,059, that is 38.2% as this one. If it comes to 78.6, we will keep 50% as the one as a level above which we will start to act. So right now, the 23.6% being cut 18,108. We are keeping that 18,108 level, this particular level itself as a stop loss. So today we sold below 18,108, keeping 18,183 as a stop loss. That is the first trading position call that we could have had. Now let us say tomorrow, if it is going to come below 18,059, if it is going to come below 18,059, there are two stop losses. One stop loss is the immediate preceding Fibonacci of 18,108, or till such time that 38.6% retracement is cut, we will keep either this I as a stop loss, this place as a stop loss, or a 78.6% retracement of that particular level of this 38.2%. For example, let me remove this. Now let us say it cuts 38.6% retracement. If it goes to 50, we'll keep 23.5. But till such time this is cut, we will keep. Now today it cut the 18,108, and immediately you see it went down up to 18,064, right? So once it started to cut this 23.5% retracement and go below that, we keep the 78.6%, 18,157 as a stop loss. So from now onwards, what we will do is we will keep on moving the stop losses either from this particular high 18,183 to whatever low that is going to take place, and 78.5% retracement of whatever that is going to happen from there. So that is one way. That is, let us say tomorrow it comes to 17,953. Let me say it comes to 17,981. Okay. Now the biggest stop loss that will come will be whatever fall that took place from 18,180 to 17,981. That will be 200 points into 78.5% added to this, or 0.235 deducted from this. So let us say 47 points or 50 points. Then it will come to 18,135 or so. 18,135 or so. So that is the biggest stop loss. That is the biggest stop loss. But if it comes to this particular line itself, then in that case we can keep 18,059 itself as a stop loss. So we can keep that and keep moving our positions. This one. So right now you can look at the counter trend mechanism, or you can look at a trend based way of working. Now how will you look at a counter trend? Let us say the first support comes to 18,020. Okay, so tomorrow watch for the activity, how bearish or how bullish it is. It falls moderately, then in that case the first buy comes to 18,020. The first buy comes at 18,020. Second buy comes at 17,981. Third buy comes at 17,925 if it comes up to that. Suppose if it doesn't come there, then in that case we have the stop loss, which is 18,000, right? So this is the average level we would have got. This 18,000 is the average level you would have got. Okay, if it comes to 18,020 and 17,981, the average level that we would have got is 18,000, and for 18,000 we will put a stop loss at 17,925. Okay, if it a little bit down, also we are not going to be bothered. We will keep 17,924, 925 stop loss and see how this moves from that particular level. Okay, now let us say it doesn't come at all. It doesn't come lower at all. Okay, we will keep it that way. Now it doesn't come lower at all. Then what we will do is we will look at the hourly chart, right? Let us say it doesn't come lower at all. Now what is this? This is 78 point from this high to this low, 18,155, right? If it doesn't come at lower at all and if it starts to move up, we will buy about 18,155 and keep 18,090 as a stop loss. 18,150 with the 18,090 as a stop loss. Suppose if it doesn't come lower at all, I will explain to you why it is. See, the peak was 18,189, right? Now today it fell right up to 18,060 or whatever it is. Okay. Now this is 78.5% retracement of this. 78.5% retracement of this level is nothing but comes to 18,155. 18,155. So what we will do is that if it goes above 18,000, let us say tomorrow there is a instead of falling, it starts to go up. Okay, we have to be prepared for both, right? So if it starts to go up above 18,155 in a smooth manner, or probably it goes in a gap up. Okay, so we will buy about 18,155 and we will keep stop loss either 18,060 or we will keep, say, since this 18,189 to 18,060. Now this has become, it has started to move above 18,155, which means we will now expect the trend to keep moving up. We'll expect the trend to keep moving up. So what we will do is that if it starts to cut 18,155, then till such time it crosses 18,189, we will keep the retracement of 78.5% of this level as a stop loss. That means that comes to 18,090 or so, right? 18,090 or so, because 18,189 to 18,060 is 129 levels into 0.235. Add to 18,060. That is 30 points. So 18,090. So our game is clear. If it starts to move up without any big fall, 18,155. So tomorrow what we are going to do is, see, either it has to cut today's high or today's because it is a very small range today. Either it has to cut today's high or today's low. If it starts to cut today's low, the three levels that we are looking at are 18,020, 17,980 or so, 17,925. So we'll keep buying at all these levels, okay? And this is a stop loss, okay, on a counter trend system. It doesn't come lower, it starts to move up. It crosses 18,155. We'll put 18,090 as a stop loss and keep going up, keep moving up, okay? So we are going to do only intraday. Now, where do we take the profits? Where do we take the profits? Now, one way of looking at it is that, see, we have, suppose if it starts to move up straight away, so 18,189 to 18,060, it is 129 points. So which are the higher levels now we are looking at it? It is 18,265, because that is where the market got resistance, right? So we look at the resistance levels where we can take the profit for the intraday or any day's high. So if it starts to move up, then in that case the next level of support resistance is this particular close, which is 18,230. So if it starts to go above 18,230, 240, there is a chance that it can close below 18,230. So anything above 18,230, we will take profit. In case if it starts to climb above 18,155 tomorrow, then in that case we will look at closer to 18,225, 18,230 levels as a profit target. As a profit target. And if it starts to, if you buy anywhere between on the counter trend, if you buy at 17,980, then 18,020 and all, on any move which is at least 100 points from the low, we will take the profit first, because we have seen the Nifty working around itself. First resistance support comes closer to 110 points, and then it starts to move up. So that's a pattern that we are seeing right now. Yeah. So if it goes up to 17,980, and if you bought at 18,020 and then 17,980, 18,000 approximately is our value. But if it goes up to 17,980, and if it rallies to 18,080 to 18,100, we will take the profits between 18,080 to 18,100, and then wait to see how it works. Wait to see how it works. Okay. So this is how normally we are looking at using the Fibonacci for doing our intraday trading. Now I have only illustrated as far as Nifty is concerned. We will come to Bank Nifty also, and let us look at some particular stocks which we can do. Let us say today Reliance Industries. Reliance, this is the daily chart. This is the daily chart. Okay. Now let us zoom only this level now. Okay. Now what happened today? We'll look. I think yes. So today there is a low which is below the previous low. Okay. That means normally we should expect now the market to come down, because this is a corrective bar high. It has gone up, so that particular low has been cut. So we should expect the market to fall, right? So that's how the Dow theory is. So now since this has been cut, suppose if you say this has been cut, okay, whatever low comes, okay, then from that when the rally takes place, it should hold on, let's say 78.5% retracement. Now let's look at the 78.5% retracement as a key. See, that has not been cut. So once the low has been cut, say it opened somewhere, we'll see whether it first went high or went low. Okay. Now let us say any rally that took place, it couldn't cross the 2483, which is the 78.6% retracement. It has altered, as I told you, between 61.8 and 78.6. It has altered somewhere in that. Now tomorrow what you can do, if the market is going, it looks like going down, if the market looks like going down, then in that case we should be looking at already this place has been cut, right? So if it looks like going down, then we should keep this low as this high, today's high, which is a 78.6% retracement. It came closer to that. So this 2480, so 2480.81 is a stop loss. 2480.81 is a stop loss for any short position right now. Now today the market closed at 2472. 2472. Now there are two possibilities for us. Reliance starts to go above 2481 or 2483, whatever it is. Okay, then we go long. We go long and keep 2464 as a stop loss for time being, for intraday. Okay, 2481 with a stop loss of 2464. Okay, now reverse, now it is 2472, right? So if it starts to cut, I would say 2464. If it's tomorrow, it has gone to 2472 today, right? If it starts to cut 2464, okay, then in that case a sell is also there below 2464 and stop loss will come at 2483 or 8183. So this is the trading plan for Reliance tomorrow on intraday basis. Just purely using Fibonacci, nothing else has been used. What are we using? We are using a 78.5%, 61.8 to 78.5% in between as a level where an important support resistance can come. We have seen that yesterday's low has been cut. Since yesterday's low has been cut, normally we should say that particular high should become a stop loss. Okay, that is 24 from wherever it fell. Okay, that is today it cut, yesterday's high is an important high. Now when it cut and fell today, any retracement of 78.5% as to is a place where we should go, we can go for a sell. It happened. Okay, now after that it closed at 2472. Tomorrow let us say there is a reversal in place to come, then in that case you should keep today's high as a place where probably we should look towards going on the long side, keeping 2464 as a stop loss. Or if the continuation of the trend is going to happen, then we should see a fall below 2464 and then we should see 2483 being a stop loss. So we should work on that. This Fibonacci ratio can be gelled along with the support resistance S1, S2, R1, R2, which you find pivot points, and a combination of both of those can give a very robust trading application. Okay, so you have to work on that. But since you already know about the pivot point trading formula, and now we are looking at the Fibonacci ratios deeply, both for intraday and position trading, if you can combine this and take a call, it will be fantastic. Okay, so now we'll look at the let us say so let's look at the day hourly chart for this, how it panned out. So first it fell. So there was a fall today at 9:15 itself. There was a fall at 9:15 itself today, and then when the rally took place, see there was a rally after that. So there it stopped. So when it rallied back to this particular level, 2480, 81 level, then in that case it is a place where we can go for a short. Now you can confirm that with any reversal by looking at a slightly shorter time bar. Now let's say the 15 minutes bar. So 15 minutes bar, it went up to this place, and you can see a deep down bar. So we could go short below this low, which is 2473, and could have kept 2481 as a stop loss. Okay. Today, of course, after that, not much of a fall, but if you can see, the markets trying to take support at every 8-10 points. So now, if you look at this, there was a fall which is 2481 to 2469, then 2469 to 2478, 8-9 points. So it was trying to trade between 9 to 10 points on after that particular this one for till such time it just petered out to be around close being 2469. So slightly indecisive close. So it can do anything tomorrow. So what we are looking at this, we are looking at this place. This is the important place, and we are also looking at this place. Okay, so these are going to be the two important places which is going to determine what probably can happen. Okay, so now we will look at Bank Nifty. Okay, Bank Nifty, let's look at the daily chart. Sorry. Okay, now let us look at, see, this is a important low, right? So this is a low, this is an important high, and this is an important low. This is an important low. Now, having decided this, we will look at the hourly chart for intraday trading pattern. Okay, so this is what we classified as an important high based on the daily chart. We will take the 78.5% retracement of this. So it just got exactly at that 42.528. If you see, it just got hit at 42.528, and then once it is below any particular Fibonacci levels, that level or one level which is above that itself has started to become a sort of a resistance. So right now we are looking at the 78.6% retracement of this move of this daily high to this daily low that has held. So we have to see whether it is going to fall further or whether it is going to rise. Now the trading plan for this, both for holding positions as well as for the intraday, could be is it closed at 42.298. Assuming it starts to really look towards moving up in any significant manner, then in that case we should be going above today's high, which is 42.528, and then we should probably look towards either this low itself, that is what came today's low. This is the 42,303. 42,303 itself as a stop loss, or the worst stop loss could be, if it starts to move above this, then the worst stop loss could be till such time it doesn't break 42,074. So 42,528 above with a 42,074 is the first trading strategy that we could think of, which could probably look towards a good profitable one. But in case if you feel that this is slightly a very difficult stop loss, then in that case we have already highlighted different types of the Fibonacci thing that is there here. So till such time if you have difficulty in this particular stop loss, then in this case what you can do is that you can use this is a 42,528, the 78.6. This is 42,710. So that means approximately in this case it is around 200 points stop loss. So the stop loss that probably you can look towards is a 200 to 250 points stop loss. That is what has happened today. If you look at based on today's volatility and yesterday's move, then in that case at 250 points on intraday is what 200 to 250 points intraday stop loss is what probably we are getting out of this Fibonacci. So what you can do is that tomorrow if it starts to move above 42,528, then you can keep 42,285 as a stop loss. So I told you that if one stop loss is if one Fibonacci ratio is cut, then keep either one which is above that or one which is even one more Fibonacci level which is even higher than that. So right now we saw that these Fibonacci ratios which are being cut here, say, for the retracement from this place to this place, we saw that once this particular area is cut, we have resistance here. We have resistance here. So once this particular level is cut, we have resistance here, right? So now, so that means you can keep tomorrow. You can even look at a move which is above 42,386 and even keep 42,286 as a stop loss. So those who are looking at something like just 100 basis point stop loss can even use 42 above 42,386 with a 42,286 as a stop loss. Okay, that is one stop loss. Or if you're looking at two levels below that, then in that case you can use 42,187, that is above 42,386 with a stop loss at 42,187, so 200 points. So those who are comfortable with 100 point stop loss can use 42,286 above 42,386. So tomorrow's trading plan is like this. That is, as far as Bank Nifty is concerned, you can look towards buying above 42,386 and stop loss either 42,285 or 42,185. Okay, the bigger position thing comes at today's high, which if it is cut above 42, I think 525 or so, with a stop loss of 42,000. 40,060 or 40,050. So these are trading ideas as far as Bank Nifty is concerned. Whether you want to use it for position trading, you may please consider this. For position trading, above 42,525 with a stop loss of 42,050. Okay, so something like 400 to 500 points. If you are looking at a smaller stop losses, you can lose 42,386, 285 or 185 as a stop loss. Whatever said and done, that 78.5 between 61.8 and 78.5% are very, very important sacrosanct level or important sacrosanct levels which probably you should look towards. Now suppose if the market, if Bank Nifty is going to fall tomorrow, now we have already identified that this is the this is an important low, right? So we'll look at whether on a, let's go to the daily. And so this is a low, this is an important low. So from this low, we'll also put a 78.6% retracement from this low. That is what we got as a 42. Okay, that is what we are getting as around 41,991. So for around 42,000, 42,114. So the stop loss, if at all there's going to be a fall, then we should buy. In case if there is going to be a fall, counter trend, then buy comes at 42,115 and then plus 41,990 or so. Okay, so these are the places where you should look towards going long. So if, let's look at 41,990. So it may stop somewhere between here, between these two levels. So it may not exactly go below this. Probably it can come closer to this. So I think you can buy the likely level where it may stop could be 42,050. So in between the 61.8 and 78.5%. So tomorrow if there is going to be a drop rather than upswing immediately, then in that case look towards buying closer to this particular level, and then from there you may see normally the Bank Nifty can rally by around 400 500 points, because on intraday normally there is a chance it could get back by around 400 to 500 points. Rally is possible, so it may go closer to the 42,450 or so. So this could be a level where you can go for a buy and probably look towards a 300 to 400 points rally from this level to take your profits. So we have highlighted today what the trading plans for Bank Nifty, Nifty and Reliance. We will try to see tomorrow, see what happened based on what we discussed today. Let us see what happens tomorrow, and we will also elaborate further by using illustrations in other stocks and commodities, right? Well, okay, so you can ask your questions now. Thank you very much. So thanks for your participation today. Please visit again tomorrow and look at this, because this Fibonacci ratios as well as some patterns with like gap patterns, both can be used for successful trading opportunities. Okay. Thank you very much.